Well, hello and welcome to this week's update. Now, this week, this update will be for all programs. Why? Because we have a shortened holiday week in the market. It is Thanksgiving in the United States on Thursday, and there won't really be any trading going on this week. Now, having said that, though, I do have one trade that I'm looking to get into a little bit early right now. Okay, so looking to get into this a little bit early. There is a trade there because if I say, look, there's no trades this week, inevitably I will get several emails saying, Sean, if we could just place one trade, what do you think it would be? Or what do you think of this trade, right? So let me give you one trade that I'm getting into a little bit early. Ideally, I'd like to get into it next week after this holiday week has played itself out, but I will give you a trade. So stick with me. Very important update, actually. Very important update for everyone to listen to because this could be a very important turning point in the markets. Now, we have right now the markets factoring in I would say a gentle or a soft recession, or a moderate recession might be a better way of saying it. I don't think there's going to be anything gentle, soft, or moderate about it. I think you're going to see a dramatic breakdown in the economy. And this is something that the markets really aren't factoring in here. And I'm going to talk about that in a moment. Now, we know this week Thanksgiving is coming out. The markets will be closed all day on Thursday. They'll only be open till 1 p.m. on Friday. The only full trading days are Monday, Tuesday, and Wednesday. Even those days will be very light volume. Many institutional traders will simply just take the week off, go on holiday, go enjoy themselves doing whatever they're doing, but they won't be trading. So there won't be much volume, and a lot of it will be, a lot of the trading will be done through algorithms. Now, a lot of those algorithms will be looking at the US dollar, which is what we're looking at right now, DXY. And a lot of those algorithms right now are trading like this: US dollar down, markets up, right? US dollar up, markets down, right? And that's what a lot of these algorithms are pricing in, right? Are actually trading off. So I think you're going to get really light volume. Certainly the US dollar is something to look at for this week. A lot of the big institutional traders are on holidays. Not really the best week to be getting into a lot of trades, if any at all. So that's the other problem. But back to what I was saying, the market are factoring in a gentle or moderate recession. I don't think we are going to see that. I think what you're starting to see already, Microsoft laying off nearly 1,000 workers. Meta, formerly known as Facebook, laying off or firing 11,000 employees. Tesla, laying off or firing the most that it has in years. And also Twitter, half of its sales force being fired, 7,500 employees potentially losing their job. Now, it's not just these companies. We've got Salesforce or CRM. They are laying people off as well. Redfin, RDFN is the ticker, and CVNA. They've all announced layoffs right now. Now, we're only 3 weeks into November, and already the amount of people losing their jobs or layoffs this month is more than double last month's total announcements. So we're seeing a huge amount of layoffs right now, a huge amount of people being fired, and I believe this is only just the start. When you raise rates, you raise interest rates, what you do is you cause unemployment. It becomes more expensive to produce goods, to hire people, and it becomes very, very difficult, and companies have to cut back. How do they do that? They do that by laying people off. So when you raise rates, you cause unemployment to rise dramatically. That then impacts the economy. The economy starts to suffer and break down, and there's a huge amount of damage that is done. It becomes very, very painful for the markets, the economy, and the everyday person. The Federal Reserve, with inflation at 40-year highs, has raised rates from 0.25%, 0.25% to 4% in a very short period of time. That is pretty dramatic, and this is what's causing this breakdown in the economy and employment starting to move up. Now, it's not just employment. We're already starting to see property prices fall. Right? There's been a huge fall in the amount of new home sales and existing home sales. They have fallen dramatically just recently. So that is going to have a big impact as well. You know, home sales I wouldn't be overstating it to say that they're collapsing right now. And, sales are a leading indicator of prices. So when sales drop, prices tend to drop over the next few months as well. When prices drop, rents start to fall as well. And that could impact in shelter inflation coming down as well, or you would expect it obviously to do so. So there's some of the things that are happening right now. Home sales are crashing, and you are starting to see oil as well. Oil's moving down as well. That's definitely something that could help as well with inflation. But right now, you are starting to see a slowdown in the economy. Right, the Fed manufacturing survey for November missed expectations by a long way last week, clocking in at negative 19.4 versus an expected negative 6.0. Now that's down substantially from October's negative 8.7, and it clearly shows that economic activity is slowing, right? So there's a lot of reasons there for this labor market and the economy in general to really start suffering, and this is what I see playing out over the next several months. You will start to see the unemployment go up dramatically. You will start to see the economy slow down, start to see a very nasty recession. At that point, you will start to get a pivot in the Federal Reserve raising rates, right? Typically, they've done it in the 70s, they've done it in the 80s. When you start to see unemployment go up dramatically, the Federal Reserve then does pivot, right? From raising rates dramatically and very aggressively to then maybe pausing rates or even cutting rates eventually. Who knows? But when that pivot occurs, you're going to see a dramatic increase in risk assets and great fundamentally sound growth assets that have been absolutely hammered 50, 60, 75%. Those type of companies are going to roar to the upside. So I believe we're going to see a sharp move down. That's what we're going to see now, okay, over the next several weeks, probably starting after Thanksgiving week, after this shortened week that we're going to go through now. But I think we are going to see a sharp move down in the markets, okay, and that's what I'm preparing for. Now, a couple of positions that we have on right now. One here is on Bro, right? We've got a bearish position here on Bro. I'll just show this to you quickly. So if we go to BRO, okay, we've got a position here. If stay in this put option unless it closes above on the daily chart 59.17, a daily close above 59.17. So for now, we're still in that position, right? Stay in that position if you didn't get stopped out of it. The other one is semiconductors. We set up a bearish put debit spread here, looking for it to get below 1200 come the 16th of the 12th. We bought it for $105 a contract. It's worth $105 a contract, right? So it's break even right now. I would still be holding that, right? Holding that at this point, particularly with what I've just said. So semiconductors, we're still holding. It did move up to the 200 and failed at that level. If you got two closes, daily closes above the 200, then I would exit. Okay, so two daily closes above the 200, this red line, close the trade. But for now, it's sitting at break even, exactly what we paid for it, hold. Now, we're expecting, if we have a look here at the US dollar, so if I go UUP, okay, I'm expecting a bounce higher from this support level, right? And you can see that with the DXY. Pretty big move down, a pretty good support level here, though. So I'm expecting the US dollar to go up and obviously then the markets to go down sharply. That's what I'm looking for, right? So a way of being able to make money with that is to buy call options on the UUP, right? Now, we enter the 26 strike call for the 16th to 12th expiry for 277. It's now worth 299, right? So we're in profit right now, but I am going to hold that. I'm expecting a more of a dramatic move to the upside, right? So holding that position right now. So that brings us to the position that I'm looking to get into now. Now, this position doesn't have a stop. Why? Because I believe that the markets could still have a bit more of a move to the upside here before they then start to fall. If you look at this trend line, probably easier to see here, you can look at this trend line here. I believe we could easily still see another little move up in the markets before we hit this trend line, then start to move lower. And I think ultimately we are going to see it take out this low here of 3491 and move lower again. Right? So a pretty sharp move down is what I'm looking for here. So we could see a little move up in the meantime, though, right? Maybe this week, because it's a shortened week and there's not a lot of volume and it's based on algorithms, depending on what the US dollar does, of course. But that's what I'm seeing. Ultimately, breaking below this low. That's what I'm looking for. Okay. So right now, if we look at the opening range, we know that it was set on the third Friday, so the Friday just gone. 3979 is the opening range high. Anything above that is bullish. I'd look at the 200 though, because that's going to act as resistance. And then anything below 3935, and we're bearish mode, right? So you've got to keep that in mind as well. But it is very much based on, particularly this week, what the US dollar is doing. But I am looking for it to move lower. So if you have a look at something called the SDS, now you have a look at what happened here. As it bounced off this low at 3941, the markets then started to move higher, right? Obviously, they're higher now than when they were there. Now, by 500 odd points. What did you see with the SDS in that time? Well, a pretty big move down, right? We've gone from around 57 odd down to 43, where we are right now, at a low there of around 42. So what I'm trying to say is, as the US stock market goes up, the SPX goes up, or the SPY goes up, SDS will go down. However, what am I expecting? Well, Sean, you just said that you might see a move up here, then turn and have a dramatic move lower, taking out this low. Yeah, so if this moves down, the SPX moves down, I'm going to expect SDS to go up dramatically, right? Expecting it to go up dramatically. Okay, so it moves inverse. So when the markets go down, SPX, SPY goes down, the SDS goes up. Okay, SPX goes, so the SDS goes up, right? SPY down, SDS up. So they move inversely to one another. Okay, so what type of options, if the market is going to go down ultimately by the end of this year, what type of options do I want to buy in SDS? Call options. I want to buy call options because they're inversely related. Now, remember, we could still see another move up here. That is going to cause pain with this trade. In other words, we're looking to buy a call option here, in the money call option, at the 40 strike. Okay, $4.80, going out to the 20th of January 2023. Okay. Now, I'm not setting any stop here. Whatever I'm putting into the trade, I'm willing to risk that amount of money. Okay, now $480 is beyond your risk level. You don't want to risk that much money. It's too much for you. It would cause you a lot of pain, a lot of suffering. Don't place the trade. Pretty simple. Wait till next week, once the Thanksgiving shortened week has got out of the way, and then we'll have new bearish positions to get into then. But if 480 is within your risk level, your risk tolerance, your plan, then you could look to place the trade a little bit early now, or wait until next week. The choice, as always, is yours. But I'm looking to set this trade up now early. I can totally accept the fact that it may lose money initially, as the markets do what? Well, we just explained it to you. As the markets move up to this trend line. If this market moves up to this trend line, SPY, SPX goes up to this trend line, SDS will be, the calls will be losing money. Okay? So if you can't handle that, probably don't place a trade. But then as it starts to move lower, and particularly once it breaks this low here, which I believe will happen, you will see a dramatic increase in SDS. It's inverse related, it's leveraged, and you will start to see a pretty dramatic profit potential in these call options. However, I'm willing to take some pain in the short term, right? So there's the trade. Now, how does it look, Sean? Well, first off, you come here to your brokerage account, type in SDS, click on enter. Now, I'm going out to January, right? January, so you'd have to choose 20th of January, 2023. Now, I want to go in the money, 40 strike, okay? So I'm going to click on the ask. Don't want to pay too much for time value here, okay? There's the actual trade here. So I'm going in at the midpoint here at 480, and I'm buying, obviously, right? Buying. Okay, so I'm going to buy one 40 strike call option on SDS out to January the 20th, 2023, 61 days from now. I'm not actually setting a stop on this. Now, if you wanted to set a stop at 240, half of what you're risking, then you could do that, right? So that could be another way that you could get into this as well. I submit the trade, and we are done, right? So that is the trade done. That's how you would set it up. No stops on this one, and ultimately I'm looking for the markets to move lower. So, my friends, I hope you enjoyed that. Very important update this week. Let's let this shortened week with no institutional investing or very little institutional investing, let this shortened holiday week play itself out, and then we will reposition ourselves next Monday. So, I'm traveling now for the next couple of weeks, and I've been traveling for the last couple of weeks. So, I hope you guys enjoyed that shortened video. Still, lots of great content in there and exactly what you need to be doing. And I will talk to you again all next Monday. All right, all the best and bye for now.